The reality is you cannot take shortcuts in your financial education. If you want to become financially literate, you have to understand income statements. I know they're crazy boring, but I'm telling you, if you approach it with a little bit of curiosity and you really learn the ins and outs of an income statement, which is much more simple than you may think, then you'll understand when you listen to earnings call and them talking about top line and bottom line, operating margin, gross profit margin, net income, you'll understand all of these things. Because publicly traded companies, 4 times a year, every quarter, they must release 3 really important financial statements that give some insight into their financial performance: the income statement, the balance sheet, and the cash flow statement. In this video, I'm going to cover everything you need to know about the income statement, which is also referred to as the P&L. Now, I'm going to use the resource that's available to everyone. It's free. It's called Yahoo Finance, and they do great as far as populating their resource with all the quarterlies of every publicly traded company, but they only go back about 4 years. If you want more than that, you have to sign up for the premium version. But also bear in mind, you can always navigate to the SEC database, and there you can see a plethora of 10K and 10Q forms. You can go through all of them, you can geek out, and also remember, almost every company, they have an investors relations section on their website where they house all of these reports. So you could go through it in detail and you could really take a deep dive. But for the purpose of this video, I'm going to keep it simple, direct, to the point. Let me know in the comment section if there's anything I'm missing, and I'll try my best to answer it there. So without further ado, let's dive in. So for any company, if you go to Yahoo Finance and then you search for the ticker symbol, so in the case of Ford, which is the one that we're going to be analyzing for the purpose of this video, you simply click on Ford. If you scroll down here, you see a lot of information, a lot on price. But if you see this here, you click on financials. And then under financials, you'll see income statement, balance sheet, cash flow. So for the purpose of this video, we are covering income statement. Now be mindful that there's quarterly and annual that you could toggle over here. And if you're looking at quarterly, make sure it's not a seasonal business, because that might throw you off, because every summer, let's say Ford might have much lower sales. And so you may think that Ford is slowing down, but it's just a seasonal thing. So for the purpose of this video, we're going to stick to annual. And we're going to be taking a look at the trailing 12 months, which is basically the same figures as here for December 31st, 2021. I'm creating this video on February 2022. So for the trailing 12 months, the first thing we see is total revenue. Now, what is total revenue? Revenue is what analysts refer to as the top line. And basically, revenue is just the total amount of money generated from selling goods or services. So in Ford's case, it is car services and also selling all of their vehicles. And again, around earnings report time, you're going to see people say, did they beat on the top line or was it a miss on the top line? They're referring to revenue or total sales. So what do you do with this figure? Well, first of all, let's bear in mind that this is not 136 million, because right here it says all numbers are in thousands. So this is actually 136,341 million. And this was their total revenue for the year of 2021. And now something interesting to point out is that you could see across time how revenue has changed. So over here in 2018, they actually had 160,338 million in revenue. Then it slumped down to 156 billion. And then in 2020, it slumped down even more to 127 billion. And now it's sitting at 136,341 million. Keep that in mind, because it's going to be interesting as we dissect this income statement to see why this is actually not a terrible number and might be better than what we saw in 2019. Now, if you ever see this symbol here, it looks like a little carrot. If you click it, you will see a drop-down menu and it will detail the different revenue expenses. Now, Yahoo Finance is sometimes different than what you see on a company when it actually reports on their 10K or 10Q. And so you can always navigate to the SEC, read up on the 10K, 10Q, or go on the investor relations sections of the website itself for like Ford, let's say, and they should have all of their income statements broken down and explaining everything in great detail. But for the purpose of this video, we're going to stick to general topics. So the total revenue, 136,341 million. Now we need to look at the cost of the revenue. So what was the cost of all these goods sold? Cost of revenue is the total amount of money it took to manufacture and deliver the goods or services. It takes direct costs into account. Now you might hear of this figure, cost of revenue, as also cost of goods sold. So we see here that the cost of goods sold for the trailing 12 months was $114,651,000,000. And so the next line is the gross profit. This is simply the total profit after taking revenues, this number here, and subtracting cost of goods sold, this number here. So all gross profit is it's this number minus this number. And then we see our gross profit or total profit. Now this is very interesting because even though the revenue in 2021 was $136,341,000,000, the gross profit was $21,690,000,000. However, in 2019, they had $155.9 billion revenue, so much more than in 2021. But their gross profit was actually less. How come? Because the cost of revenue, so the cost of goods sold, was a lot more in 2019. It was $134,693,000,000 versus just $114,651,000,000 in 2021. This is very important to keep mind of, and this is why it's helpful to take a look at this and not just look at the top and bottom line that you see in headlines, because here you can actually go and figure out, well, why were their expenses so high in 2019? And maybe based on your research, you can make a better thesis for whether you should be invested in the company long-term, short-term, etc. And also you'll hear gross margin a lot, and all that is you take this number and you divide it by this number. So it is the gross profit divided by total revenue, and that gives you gross margin. So if you ever hear gross margin, simply gross profit over total revenue. So we just covered this section here, and it took into account the cost of goods sold, which I mentioned is direct costs. But how about indirect costs? Well, a lot of indirect costs, they're referred to as operating expenses. These include selling, general and administrative, payroll, rent, research and development, depreciation, amortization, yada yada. I covered all of this in a previous video. And if you want to see the actual operating expenses breakdown, you can always do the drop-down menu, or like I suggested, read the actual 10K, 10Q. And once you have those operating expenses, you take that and subtract it from gross profit and you get operating income. So in the case of Ford, for the trailing 12 months, or let's say for 2021, which is the same as trailing 12 months in this situation, then the operating expenses was $11,915,000,000. So we had to take that and subtract it from the gross profit, which was $21,690,000,000. And we have our operating income. And similar to gross profit divided by total revenue giving you gross margin, you can get something called operating margin, which is also, they mention it a lot in earnings calls. You can find that by taking the operating income, dividing it by total revenue, and that is how you get your operating margin. So once you have your operating income, typically on an income statement, they cover some non-operating interest costs, then other income expenses. So this can be a gain on maybe some of the investments that they have, or earnings from equity interest. And there can be a lot. Again, you can hit the drop-down menu and see the actual breakdown. But what you do with these is you take this negative number and then you obviously add it to this positive number. And when you add it to the operating income, you will get your pre-tax income. And what is this? This just means that this is your income if you had to pay no taxes. But most companies, they have to pay taxes. And so the next line is usually tax provision, which is basically the estimated amount of income tax that a company is legally expected to pay to the IRS for the current year. And you might think that this is usually a huge expense. But as you can see here, for Ford in 2021, in 2019, it was actually negative. So in 2021, they're actually receiving $130 million from the government. So this is actually a negative. So they could add this to their pre-tax income, meaning that they will come up with a net income of $17,937,000,000. And so this net income figure, it is very, very important. This is considered the bottom line. It's what the business actually made after all the expenses, including taxes, are accounted for. The income statement obviously only gives a glimpse into the story. Balance sheet and cash flow statements provide a lot of helpful insight as well, and I will definitely cover them in a separate video. But what I want to show you here that I feel you will appreciate is that if we scroll down and we take a look at the net income, you will see why Ford stock has been doing really well over the past year. Because in 2018, the net income was $3,677 million. Then it went down to just $47 million. And then in 2020, it actually had a massive loss. So it lost $1,279 million. But in 2021, the net income jumped to $17,937 million. And also, I want to point out this chart here because if you're into stocks, you're going to see this type of chart. I'm going to show you with Google as well. If you scroll down anywhere on google.com/finance, you look for anything, you see the financial performance. Remember, you could toggle between quarterly and annual, but typically in green is the revenue. This is the revenue generated for every year. And it's helpful to actually see it because just on the balance sheet, you might not know how it relates to one another. But here we can see this is not very impressive as far as revenue growth. But what is impressive is the amount they actually got to keep of their revenue after all expenses, including taxes, were accounted for. Because look here, in 2021, in the past 5 years, this is the largest by far. And if this keeps growing, this is going to bode really well for the company. They could reinvest this, they could put it into more R&D, they could go ahead and expand. So the more money they have, the more they'll be able to do with it. But remember, we also have to take a look at their balance sheet and their cash flow. But I wanted to point out here, the green is revenue, the blue is earnings. So you could see over here in 2020, it actually went negative. 2021, it's positive. And over here, the same, 2020 negative, 2021 positive. Now, usually if earnings was a little bit higher and always positive, you could see the trend, and it paints a very interesting picture because it's showing you what is occurring across a time horizon. And that's always important. Just these numbers alone, they don't tell you anything unless you can compare it to the historical revenue, the historical gross profit, the historical cost of goods sold, the historical net income. This is all very important. And then you could take these figures and compare it to, let's say, GM, which is a rival of Ford's. And then you could see, oh, maybe I should diversify, invest in GM as well. Or maybe GM is a better investment. And so this is how financial analysts, this is how all these quote unquote stock gurus, this is what they do. They go, they look at the income statement, they combine it with a lot of valuation measures. They take a look at balance sheets, cash flows, and they develop a thesis that is strong because they went and did research and they understand why they are holding something. A lot of meme stocks, a lot of stocks that were very, very popular during the pandemic, these were stocks that were highly unprofitable. And if you took a look at their income statements, balance sheets, cash flows, they're a complete disaster. But the story was interesting, and a lot of retail investors, they are not savvy enough to go and look into this stuff. And so a lot of them have now dipped quite a bit because the underlying value is not that strong. The foundation's not that strong. That's not to say that they won't recover and that there won't be a boom later on. Or maybe some of these companies that are unprofitable now, if they start turning a profit, they're going to skyrocket hundreds of percentage points. So I'm not saying it's a nonsensical investment or it doesn't make sense. In fact, I covered some of these companies during the pandemic. But it is to say that you should always do due diligence. You should always educate yourself on these types of topics so that you can do fundamental analysis on your own, so that you can truly, clearly understand the picture. So you're not doing guesswork and you're not just clicking on random YouTube videos or reading random articles by random analysts and saying, okay, I believe this guy, I believe this publication. You can do all this yourself. And this is the purpose for these videos. I'm not starting a course. I'm not charging you anything. I just want to learn along with the rest of you. And so hopefully you find this information to be helpful, useful, fruitful, and it will help you to grow your portfolio. If you appreciate it, leave me a like, a comment, subscribe to the channel. I'm going to cover a lot of other stocks, options trading strategies, cryptos as well. We're going to talk NFTs. We're going to talk anything related to investments. I'm going to start live chats at some point. We're going to bring on other people. We're going to do interviews. I'm going to try and grow this channel to the best of my ability. I appreciate you guys watching the video in its entirety. Talk to me in the comment section, and I'll see you in the next video.